very warm welcome to everybody here from far and wide and everywhere, not just here in Singapore and Indonesia. I believe we also have people from other parts of the world joining us for this wonderful webinar that we have. And with me we have Willson Cuaca, who is co-founder and managing partner of East Ventures. And we're here to talk about what startup founding in post-pandemic Southeast Asia might look like. So just to kind of get us started, I'm going to run us through some housekeeping matters. I believe all of you are quite familiar with Zoom, so we don't have to get into basics here. First of all, the Q&A box is active, so we will be setting aside about 15 to 20 minutes for you to be able to submit your questions and for Willson to address them. Just take note to submit your name and your organization when submitting your questions, and someone in the back end, most likely one of our editors, will be collating these questions in which we can get them answered at the end of the session. There is very likely going to be a chance where some of these questions will go unanswered. Not to worry, we will be collating them and sending them to Willson, which we can turn into a separate article at the end, which you can ensure that those questions will be answered in a separate article. You will notice there is a raise hand feature that is activated, but we will not be using this in this webinar, so just ignore it. Yeah. So a brief introduction to Willson. Willson Cuaca is the founding and managing partner of East Ventures, an early stage investment fund with a focus on consumer internet, mobile, and SaaS. The firm was founded in 2009 and has since founded hundreds of Southeast Asian companies, many of which are names which are very familiar with us today. The likes of Tokopedia, Traveloka, Social Bella. So a very warm welcome to you, Willson. Thank you for joining us.
Thank you, Christy.
Yes, so before we start, I just want to run through some interesting data that our data team had actually put together. This set of data, which you're about to see, is from our Q2 Southeast Asia data report. And as you can see there, I mean, we all know, all of us are, investors or startup founders, here in Southeast Asia. The coronavirus really set in around Q1, Q2. So, we were really closely watching some of the deals that were happening during this period. And what was interesting was that when Q2 came around, we didn't actually see a significant drop in terms of deal value. So the amount that startups still managed to rake in was about $2.8 billion, but that was over an increased number of deals, so 184 deals over Q2. So you can see that that's represented by the blue bar. And we also saw more early stage investments. So if you look at the next slide. Yes, more early stage deals, which continue to draw more investors into the space. So the likes of seed and Series A stages in Q2. And this is represented all across Southeast Asia, Singapore, Indonesia, and the rest of the other markets. So maybe just kind of jumping into that, Willson, I mean, you are an early investor here in Southeast Asia. I mean, how has the whole experience been like over the last 2 months, especially with regards to your investment approach and how you've been supporting your portfolio companies?
Okay, thanks, Christy. So we look at this crisis like a war, and there's a clear distinction between peacetime and wartime. So during peacetime, before the COVID, we have been one of the most active investor. We invested a lot of startups, and that also means during this crisis, we have a lot of problems. And for that reason, we want to make sure that we're able to help our startup in the volume. So we deploy some kind of like systematic way to actually make sure that we can help them. The first thing that we want to ensure is the mindset of the management team and the founder. The median age of our founders are about 24, 25 years old. And during the Asian financial crisis, or probably in a global financial crisis in 2008, probably they're still in the school. None of them actually have been through the crisis before. So for that reason, we have to ask them, did you recognize that this is a crisis? And it is very unfortunate that where you live matters a lot. For example, in Singapore, since February, they have been pretty strict when the Wuhan virus popping up. They have been do restriction for traveler from China. While in Indonesia, it's pretty chill and relaxed in the beginning. So this actually translate to the people on the ground, how the government react. In Singapore, we have been like a bit cautious, while Indonesia, everybody's still very chill. So for us, we have been through crisis in 98. I was in Jakarta at that time. I see how the things are really bad on the ground. I was in Singapore in 2008, another crisis. But I think this crisis is not only economic crisis, but also humanity crisis. And we take a very conservative position on this. We think that this crisis is going to be long and hard. We take that stand since March. I asked all my team to use the analogy of World War III for this crisis and try to understand how people survive during World War II, how the company survived during World War II, so that we know what are we going to do on this. So we run through all our startup, we call some of the founders and make sure that they have a good mindset and understand this is crisis. Not everybody actually concur to this. Some things this crisis will recover, will go away, and then we will recover pretty easily. Some things that it will not come to Indonesia because some of the public statement saying that Indonesian is, immunity to this kind of virus. There is many things going on, yeah. So for those that understand this crisis, we then go further with them, ask them how many runway, how much money actually you have in the bank, and what's your monthly burn. Divide that and you get the runway. Can you make sure that you have more than 18 months runway? But for those management or company that doesn't recognize the crisis, there's no point talk too long. Why? Because if you go drill to the plan, their plan will not be aligned with what we are thinking. So we talk to those that align. Yeah, go ahead.
Do you still see a difference between, you did mention a difference in the reaction between Singapore founders and Indonesian founders. Do you still see a difference between in the reactions between both sets of founders?
Oh, definitely there's a different reaction, but we focus more into Indonesia because 80% of our founders are located in Jakarta. Yeah, and most of the early stage actually in Jakarta. In Singapore, we invested a lot of growth stage. So growth stage founders, the mindset is more mature actually. They recognize the situation and they react quickly. So how you're going to survive from this crisis actually is according to how you respond to it. It is not about the sector. It is not about the cash. It's really about your response, how you're going to do that. How are you going to respond to this? Yeah. So once we understand their financial position, and one thing that a lot of the founder miss is the account receivable. You have to take assumption that you cannot collect the money if the crisis is really getting worse. So we talk about this in early March actually. Yeah. So by doing that, then we screen through all, we do the health check, and we put in place a systematic way to monitor them and make sure that they implement it. But it's very difficult because not everybody have gone through this crisis before. I would like to share some screen for those founders that some of them that already recognize that this is crisis. This is what we do. Can you turn? Let me. Yeah, maybe just a quick one. The screen sharing is disabled.
Yep, it has been enabled.
Okay. Yeah. So we put a 3 assumption. First, the revenue dropped to 50%. Revenue dropped left with only 25% or 0 revenue. And based on the cash in the bank, no account receivable, how long is your runway? Try to make sure that you have more than 18 months. What are you going to do? First, you have to remove your fat, marketing, traveling, any unnecessary expenses, freeze the hiring. Then you have to eat less. Probably you start cutting the salary of the top management, slowly go down if necessary. And then ration. This is probably the worst one that we try to avoid if possible, which is layoff. And then please make sure that you understand when to trigger the button. This is where the completion date is very important, because even if you plan it, it takes a while before the what do you call it, the effect of this cost cutting really affecting your P&L. So completion date of this exercise is very important. Do you need to do it now immediately? No, because your revenue may not drop yet. Your revenue probably still like 80%, not yet 50%. But you have to get ready when your revenue is 25%. So by doing this, actually, all the founders have the mind exercise, what to anticipate when this crisis become worsening. So this is important, and you have to understand that every founder have their own founder bias. They live in their bubble sometimes. They read newspaper. If it's good things, they love to be related to that. If it's bad things, they think it won't happen to them. This is a human nature, and this bias always kick in sometimes. So this is where actually us as investor, we have to guide them and make sure they think objectively about the situation. Yeah. So then after that, once we deploy this, we understand the mindset. We deploy this 18 months runway, and we tell them, don't think about fundraising. Because during the crisis, it is very difficult fundraising. And definitely the upcoming investor will press on the valuation. So try to survive. Don't get, I mean, in any war, you have to survive. Don't get shot. You cannot die during the war. But if you survive, you cut, you are injured, but you still have muscle. You still can recover and run again after the war. So that's the mindset. And then the third one, then we start kind of like monitor them like monthly, weekly. Some of the worst case scenario, we monitor them daily. Yeah, so this is the COVID response to our existing portfolio. Because of this kind of response, we are very busy. This is one of the, not the one, this is the most busiest period in my VC career, actually. Yeah. And Zoom doesn't help because you can call a meeting like easily, right? One day you can have 20 meetings, 15 minutes, 15 minutes, just in case to touch point and talk to people. Yeah.
So you mentioned that 18 months is your kind of ideal scenario in terms of, runway for all of your startups. How many of your portfolio companies have actually achieved 18 months at this point when it's only been, slightly over a quarter, where, coronavirus has actually been in Southeast Asia, and it's not so easy to be able to get 18 months within such a short period of time.
You're
unless
right.
You are really ruthlessly cutting costs because raising capital in this environment is hard.
Actually, you can't do that. You can't do that immediately. Yeah. So for that reason, not everybody will get into 18 months, but everybody have to prepare to be there. But first of all, they have to identify that this is the target that they want to achieve, right? Once they identify this, if they can't go 18 months, then we go to the next option. Are we going to do fundraising? What are the capability that we have? Can we have, then we start going into the unit economics, cost structure, try to see, is there a way for us to repurpose the capability that they have built prior to COVID, and then what are they going to do with that capability? There are three types of startup actually impacted by the COVID within our portfolio, 100 plus. The first one is the one that badly impacted, those including like retail, travel, etc. The second one is slightly impacted. Those are including like B2B because they cannot do project completion, they cannot collect the money. The third one actually positively impacted by COVID. This is including like media company, because many people have a lot of screen time, so they spend more time with the internet. Education, healthcare related, logistic, e-commerce. Yeah. So once you know all this, not everybody have to cut, Only those badly impacted, then you have to be mentally prepared to embrace the storm. Yeah.
But in terms of capital deployment, what is this going to mean for you? Because clearly there are certain sectors that have been more severely impacted, like the likes of hospitality, F&B, retail, all those guys have been very severely impacted. And yet at the same time, you've got other companies, for example, media or even education, which has, suddenly there was this significant shift into the limelight, and then suddenly they're like the next startups which everybody wants to invest in. I mean, what does this mean in terms of capital deployment for East Ventures? Because clearly that's going to change.
Correct. So instead of looking at the sector by sector first, we try to understand the founders and management team response, because that's more important. If they responded right, then I think it will be worth for double down. So for example, like give you a very clear example, like Traveloka. At one point, Traveloka business actually going down it's like below 10%. Yeah, but the way they respond, the way they look at the cost structure, the way they do things, I think is pretty inspiring. Yeah, so for that reason, then they're able to raise subsequent round as well. Yeah. So actually response is very important, not only sector. Even though you are in a good sector, right? The sector, but you still have to think, is this growing numbers is just a short-term phenomenon, or it will last after COVID? That's another question. And how actually the management team react to it. So the reaction and the response of the management team is the key for us to decide.
Yeah, I mean, speaking of Traveloka, I mean, there have been several reports about Traveloka and how they managed to raise some funding recently. But what's interesting is that now they're raising it at a lower valuation, right? Which I guess is not that surprising considering that it's, you know, travel related. I mean, what does that mean for you as an investor? I mean, especially when it comes to issues like down rounds, you know, renegotiating valuations that simply may not be you know, consistent of, you know, what's the growth that they were expecting for the next, you know, 2-3 years. How do you speak to your portfolio companies when it comes to, you know, handling such difficult situations?
So I think to answer your question, having a portfolio like having a children. So some of your child actually having a very difficult exam. So you don't penalize them, right? Because it's not their fault. But you encourage them and help them to go through the exam. Yeah, I think that's how to answer that.
Okay. And I mean, have you encountered times where, you know, founders are, you know, as you mentioned, you did mention earlier that sometimes founders get caught in that bubble.
Yeah.
You know, how difficult is it for someone like you to come alongside them? And I mean, I guess part of it, the capital is one part of being an investor, right? You know, being able to provide capital at a point of time.
I think, in my opinion, right, capital is the last thing that we talk about.
Okay.
It's about how we guide them and how we coach them go through this crisis is more important. Capital is just a tools, yeah, but the mindset, the response, the action, those are the key, yeah. So for those that don't listen, what will you do? It's the same. You have to over communicate, right? You keep talking, talk until they listen to you, yeah, unfortunately. Or send them newspaper article when things are bad. Then they realize, oh yeah, this is real, this is reality.
Yeah. You also mentioned earlier that, you know, I mean, right now we are in the middle of, you know, everyone uses the word unprecedented. It really truly is unprecedented in many ways. When you compare the current crisis that we are in today with the previous crisis, as you mentioned, the GFC, which was actually around the time that you guys started the VC. So East Ventures was started in 2009. How different has it been for you as an investor? Like, today versus, you know, 2008, 2009, and then also even further behind with 1998 Asian financial crisis. How different has it been?
It's very different because this time is not only economic crisis, but also a humanity crisis, right? Because of the virus things. But in the past, but there's a lot of similarity. For example, like you see a lot of talents now in the market. You see that the valuation is going down. You see that there's a new behavior on the consumer side, for example, the way they consume media, the way they do transaction online instead of offline. You see how the corporate doing the digital transformation. It accelerates the digital transformation within the enterprise. But the difference is this crisis is a lot more than the previous crisis. And it's not only a game changer like last time, we call this a game reset. So it's like playing game, you play Super Mario Bros. And then someone accidentally hit the reset button, everybody have to start all over again. So about similar. However, capability and trust that you built before the COVID is very important right now. Because during the crisis, during the hard time, those trust and those capability will be the one that's going to save you. It is going to be very difficult to build a new relation with the investor or with the new portfolio during this, because you can't physically meet them, right? Only through Zoom, etc. But things that you built in the past, this will benefit you. So those that have doing good in the past, I think you will continue, yeah. And some of the portfolio, we see that they're having trouble in this crisis. It's not because of the crisis itself. This crisis accelerating the trouble, expose some of their fault. They have been in the trouble from the past. Yeah, this crisis is just expose it. Yeah.
But I mean, another thing that a lot of people bring up when you talk about previous crises, especially the Asian financial crisis and GFC, is that the exposure that Asia had to, especially for GFC, to some of these crises was not really as significant. I think partly it's also because, we're living in a world where, it's so globalized now, and we're so independent on so many different nations today compared to in the past. And therefore, the rebound that we saw in the Asian economies well, I guess maybe not for the Asian financial crisis, but at least for the GFC, was a lot faster. But, the coronavirus just doesn't seem to be going down that path.
Yes, yes.
What does that mean for you as an investor? I mean, both in terms of setting aside capital for your portfolio companies, and as for you as a VC in being able to stay alive as well.
Yeah. So I think it is correct what you said just now said, that this is very different. So by recognize that this is different is very important. So it is very important for you to get yourself prepared to go through the storm. That's one thing. And every crisis brings clarity. You will see a new kind of opportunity popping up because there's a change of behavior, there's a game reset, there's a game changer, there are many things on the ground that will change. And for that reason, you have to be mindful, reading the signal, try to be sensitive on the ground, and I think you will discover a lot of opportunity. Yeah.
Do you think we're in the beginning of, what is going to be a down, have you reached the bottom yet? Or do you think we're just at the beginning?
Okay, on the base, I can't really answer you precisely because we are still in the middle of it. But based on the data from Indonesia, from our portfolio, the bottom actually in April. We see a slight recover in May after the Hari Raya. I think people start going out, and then after the lockdown is up, some of the activities coming. We see a lot more activity right now. What worries us is second wave, if there is, whether there will be another lockdown, or I don't know. Yeah, those are the things we really can't predict. Yeah. So those are the direct data from the ground. On the fundraising deployment, I think more and more investors will be wait and see. So those graphs that you see in Q1, Q2, all going up, I think that doesn't represent exactly what's going on right now, because those graphs based on when the deal being announced, right? But deal has been made probably 3 to 6 months before the discussion, and probably closed during this period. So a lot of announcements saying that some of this deal has been raised during the crisis. I don't think it's true. It gives a wrong. It gives a very wrong picture of what's going on. I think the real impact, the real number that will hit your graph will be in Q3 and Q4 this year. I think Q4 will be worse when the holiday. Normally Q4 is always slightly lower because of the holiday, etc. This time, yeah, then I think it will be worse. Then we see how it goes next year.
How have we seen valuations look like so far? Have you seen any moderations yet?
As long as you don't fundraise, then you don't feel the valuation, right? And as long as my startup able to survive longer, then we don't need to raise money, and we don't need to lower down our valuation. Yeah, but definitely virus will be a good excuse for the investor to press the valuation, regardless of your performance, because it's uncertainty. Yeah.
So you're expecting more downward pressure from investors?
Oh, yes, of course, yeah.
Okay.
But I think all the good company will still get funded. That one is, yeah, that one is a reality.
And for yourself as an investor, I mean, broadly speaking, I think a lot of investors are expecting, as you did mention, more downward pressure when it comes to valuations. I mean, do you see this as an opportunity to be more aggressive when it comes to deploying capital, or is this an opportunity to be a bit more cautious and kind of rein in your your capital deployment?
I think one of the philosophy of East Ventures is pragmatic aggressive. So we are pretty aggressive, but we're still very pragmatic. Yeah. And we are very careful actually in picking up the startups. So we will continue what we are doing for sure. Yeah.
But are you still as aggressive as you were before? Because I think you guys have always had a reputation of being very aggressive when it comes to investment, and we do know in the last 2 years has really been.
Actually, it's not really we are aggressive, but we easily fall in love with the founders when they have a great idea.
We fall in love with founders.
Yeah. When they pitch to us and they share some of their idea, we like, oh wow, very good. Then we think that it will work, then we invest in them. Yeah, it's not. Because most of our deals actually inbound. We don't go out and find deals most of the time. I think almost like 95 to 98% all the deals actually inbound or referred to us. Yeah. So are we aggressive? I think not really. It is them aggressively approach us, and we really like them, and then we deploy the money. It's not like we are like, naturally go out and hunt. No, we are not. Yeah.
But I mean, moving forward, do you see yourself keeping pace when it comes to like deployment pace? Will it be the same as last year, or do you see yourself, kind of slowing that down a bit and focusing more on your?
Frankly speaking, I don't know, because it depends on the inbound that come to us. But this crisis actually give us a lot of clarity which one is a good founder, which one is a decent founder. The reason is the way they respond, the way they analyze the crisis actually tell us a lot. And the way they observe the behavioral changes on the ground tell us a lot. So this kind of filtering actually natural, and it's easy for us to actually kind of like select them. Yeah. In this crisis, it's easy for you also to actually differentiate between what is essential, what is non-essential, what is painkiller, which one is vitamin. Everything has become so clear, because when you have less, then your priority change. When you have more abundant, your priority will different. That is the human nature actually. If you understand this, then I think it's very easy now to make decision on investment. That's probably what I want to tell you. So if the volume going up, and it's easy for us to make investment decision, then the output will be a lot of more startup get funded. And then when you go to the media, they call it aggressive.
Okay. I mean, have you encountered any, this crisis has also brought about a lot of what we call like bad behavior from some VCs who call themselves very founder friendly. Have you seen an increase in the number of such cases, especially given the portfolio you have? You have so many different companies who, I'm sure there are a number of them who are in difficult times where, the crisis has really exposed the true nature and intentions of investors.
Yes. We see when the portfolio getting trouble, some investor immediately resign from the board and run away.
They resign from the board.
Yeah. Yeah, we see a lot of funny things happening on the ground. Some a lot of things. Some give term sheet and then cancel it, reduce the allocation, etc. Yeah. A lot. So during crisis, again, it brings clarity. Correct. So it's also the clarity of which one the real friend, which one the real partner, or which one is just a business partner, or which one is the opportunistic business partner. It is very clear right now. Yeah.
Okay. Sorry, I just look into. Sorry, I was just looking at my my notes for a moment. Yes, another thing as well, with regards to COVID as well. A lot of news these days, I think when you enter a period of crisis, is a lot of founders, or startups which are not able to make money during these times, they start to get into very creative accounting practices. How much of a concern is that for an investor like yourself? Like now they talk about like EBITDA, so like EBITDA before Corona. I mean, this is just one type of metric, but like, is that a significant concern for an investor like you? And what are you how are you communicating this to your own portfolio companies?
We are not that creative on accounting, so we never experienced that with our portfolio. Yeah.
Not at all?
No. Why you want to be creative on accounting? When people do due diligence, then immediately will be discovered, right? You can't hide that forever.
Mm-hmm.
Yeah. No, that's never crossed in our mind.
Okay.
You're creative in marketing, not accounting. Okay, maybe that.
Well, I mean, maybe on a forward-looking basis, maybe not currently with your portfolio companies, but for those that are about to get into troubled waters, or when it comes to
maybe
looking at new investments.
I understand where you're coming from. So let's focus on, let's say, more detail, like in terms of spending.
Mm-hmm.
During good time, when you spend marketing money, you hire people, you offer hire, it is okay. Why? Because it's good. You are easily forgiven if you make mistake, because the market is good. Everything, when a rising tide bring up all boats, right? So it is okay. But during the crisis like this, you are not forgiven if even when you make a small mistake, because that will impact your runway when you cannot fundraise. It will impact a lot of stuff. It will impact people's life when you have to lay off people, right? So for that reason, the margin of error during this crisis is very small, and you have to be precise. So for that reason, you have to be more detailed and more disciplined, more prudent, anything during this crisis to handle your financial. I think that's the answer.
Yeah, I mean, the reason why I brought this up is also because, even these days, the auditors themselves, I'm sure you've been following like the Wirecard scandal, right? Where even the auditors themselves are also getting into trouble for not doing their own, what they should be doing, their own DDs. So what more for investor, and well, you say that you're not aggressive, but I think you're quite aggressive as an investor. I mean, when it comes to doing DDs across all these different companies, it must be going to be more complex and more challenging to be able to weed out some of these founders, which actually may not even have a viable business at all.
No, we haven't encountered those so far. Yeah.
Okay.
So I can't comment. Yeah.
Okay.
Or maybe, yeah, no, it's okay.
How big is your portfolio now, actually?
I think we have about 170 plus on seed fund. We have about 20 plus growth fund, so almost 200.
400 companies.
200.
200 companies.
Yeah,
okay.
170
that's
plus 20. Yeah, correct.
How do you keep track of the progress and development of all your different companies across all different...
we asked them to send us reports, and we analyze all those numbers. Yeah, we keep track on them on monthly basis. But when crisis, of course, it depends on the severity of the situation. It could be weekly, it could be daily, it could be hourly. Yeah, sometimes when things are panicking. Yeah.
And in terms of, I mean, the size of even East Ventures, I mean, how challenging is it for you as a VC company to be able to hire enough talent and retain the number of leadership talent to ensure that you can manage all these different companies within your portfolio?
Oh, you're talking about as a firm?
Yeah, as a firm.
We have a very low turnover, actually. Almost none left the company. And if they left the company because they want to continue their study or anything. So we're taking care of our staff pretty much. We always tell them that don't see us as your superior or boss. Look at East Ventures as a platform for you to grow. Whatever you want, you do your best. And if you want to explore to different role, let us know. We will make sure that we give a best chance for you to explore and improve your capability so that you can become the best of you. Yeah. So for that reason, we don't really look at, for example, like age or education background, experience from big company or etc. We look at the ability for them to interact with their peer, the ability for them to learn, how they learn, and what important is how they do self-reflection. Because only when you understand how to do self-reflection, you know your weakness and you know your strength, and you can plan what you want to do with it. Yeah. So in the beginning of the crisis, I think in February or March, even before the government announced work from home, we already work from home. All of us start from Singapore. And then in Jakarta, we start, I think in March, before the government announced it as well, because of one reason. One of the patients in COVID positive patient in Jakarta ran away from the hospital. So we're kind of like shocked, like, oh, what does it mean? Okay, don't think too much. Everybody work from home, as simple as that. And then when you work from home, actually it's not that simple. You know, everybody thought that work from home is good. I mean, in some of developed countries, it's good because of the infrastructure is ready, the internet connection, the housing and everything. But in some of the emerging countries, it's not that simple. So instead of force them to work from home, we enable and empower them. We are actually giving COVID bonus to our staff so that they can renovate their house, or they want to buy furniture, they want to buy nice cameras, so that they feel comfortable work from home. Yeah, and we want to make sure that everybody really use their potential to improve themselves in the firm.
So I mean, so all of your staff members are working 100% from home at the moment, and even with regards to deal making,
no, not 100%. I think it's about some of them go to office once a while, especially in Jakarta. In Singapore, still 100% work from home.
And when it comes to doing DDs at East Ventures, is that all conducted through Zoom at the moment? How do you guys, have there been any changes on that front, or not really?
At seed level, what is DD? When the startup come to us, pitch the idea, what to DD? Only two young gentlemen in front of you. There's no data point, there's no data room. Yeah. So at the seed level, actually, business as usual, because the way we make investment decision is by talking to the founders, whether through Zoom or meeting in person. To us, it doesn't really matter. Yeah. But for the growth side, yes, probably you need some of the DD. But then you have to go through Zoom or different kind of means. But we have people on the ground, so it's not a problem so far.
So if that's the case, then how is deal making going to look like for the next quarter or even Q4? Is that going to slow down or no?
At the seed level, no. At the growth level, yes. Because the way the interaction between investor and the portfolio is different at seed level and growth level. Yeah.
Okay. We've got 5 more minutes before we proceed to Q&A. Maybe there was one particular aspect that I wanted to ask as well, and that's regarding the exit environment in Indonesia. I was having a conversation with my colleague Tiviana, who does a few stories around PE for us, and one of the things we were talking about was that how it's actually quite challenging for a number of PE firms to find exits. I mean, do you think that's the case, especially given the sudden rise of the Indonesian venture ecosystem in the last few years? You've seen the likes of so many unicorns just almost emerged virtually overnight, and yet you've got the IDX, which I don't know whether you think not everyone first of all is going to do an IPO. At the same time, some people are saying it's not so easy to do trade sales. How do you see the exit landscape kind of shape up in the coming months, years, especially for yourself as an investor?
So far, we have no issue doing trade sale. Yeah, even though recently we just sold Mocha to Gojek. There are a few trade sale going on right now. We are working on it. Yeah, I can't comment on that because it seems like so far okay for us. Yeah.
And who are these buyers? Are these mainly venture-backed tech?
You don't see that way. You don't see that way. You don't target the buyer. You target the value gap. So what kind of value you build on your portfolio? What are the value that the other guy try to look for, and find the gap? If there is a gap, then there will be a transaction, regardless who they are. It could be corporate, it could be family office, it could be PE firm, it could be anyone. Yeah. but try to understand the value gap. I think that's the key word.
Mm. But where do you see most of this coming from? Do you think that's going to come more from some of the big conglomerates in Indonesia, especially with regards to Indonesia specifically? Or do you think, you know, the likes of Grab and Gojek, I mean, they have been a source of exits for you guys recently. Do you think you see more and more of these unicorns being the ones acquiring a lot of these smaller companies in the next?
I think other than value gap, the next one is who has the liquidity.
Mm-hmm.
Yeah, so it can be anyone again. Yeah. That we can't profile them actually because we don't know who has money, who has no money, right?
Mm-hmm.
Yeah. But as long as they have liquidity, there's a value gap, then it could be a potential transaction.
What about,
for example, give you example. When Grab acquired Kudo, they just announced that they will allocate 250 million for Indonesia that time. So it means they have money, they want to do something, boom, they get Kudo. And then Gojek has been bought over our portfolio like Loket, and now AD actually running the GoPlay, and then Mocha, yeah. Tokopedia bought Bright Story, yeah. Other discount last time, yeah. So they're it really depends on the value gap and liquidity.
And I mean, you did mention about, you know, Tokopedia, Grab, and Gojek being, you know, acquiring a number of your companies. A lot of these transactions are not cash exits. A lot of them are actually...
No, it's not true. It's cash.
Oh, it's cash.
Yeah, otherwise, how am I going to return my fund?
Okay.
That's the reasons that we have a good return for all our funds, and being awarded as one of the top performance GP.
I see.
Yeah.
Okay. And I mean, another thing as well is also the IDX. I think the IDX has been, you know, recently they unveiled this acceleration board. I think they're also trying to encourage more of these tech companies, which are still loss-making, to still be able to list on IDX. And, you know, they're also in conversations with a number of these US, you know, boards to allow dual listings with Indonesia. I mean, do you think I mean, I guess as an observer, you know, do you think the IDX is making, you know, kind of pressing the acceleration button fast enough for, you know, some of these companies to be able to consider IDX as an exit option for themselves, or do you think it's too slow at the moment?
No, I think IDX on the right track right now. They have a right mindset, and they're willing to change. They're willing to adopt and be relevant to the market. I think we also seen the rise of retail investor, the millennials. So during this period, we do see few trends other than like education, healthcare, media. We also see investing platform getting a lot of momentum. Yeah, some of our portfolio, especially retail, that buying share stocks, those are increased very fast. Yeah. So I think everybody is in the right direction right now, in my opinion. Yeah.
Okay, cool. All right, so I think we are very closely approaching the 15-minute mark for our Q&A. But before we jump into our Q&A, we just wanted to show you some interesting data. Actually, rather, it's our research and data product. So that's going to come up in a moment. Okay, so as you can see, it's actually a recent survey which our data and research team just recently completed, an investor sentiment survey. So basically, what we did was we surveyed about 50 PEVC investors here in Southeast Asia about how they foresee and how they forecast, you know, COVID-19 and how that's going to impact their openness to doing investment in the next 6 months, what's left for 2020 and 2021. So just to kind of tease the report, we have just one slide next. As you can see, I think the general sentiment that we are gathering is that, you know, a lot of investors are still, you know, cautiously optimistic. I think you would say that. Some 64% of them said that, you know, they are setting aside additional capital to support their existing portfolio. And looking ahead in the next 12 months, you know, 42% said there's no change in their fundraising target for the next 12 months. 28% said they're not fundraising at all. So some 70% of them either no change or not raising their not fundraising at all when it comes to next 12 months. So overall, as I mentioned, cautiously optimistic, our favorite phrase. But if this is something that, that interests you and, you're looking to dig a bit deeper more into, this will be all part of a larger research and analytics product, which we have already launched just very recently. And we're running a 1-month trial, just $199, which includes a whole set of things you can see there. If you're interested, do write into us. It's our email ad is subs@youthjudicial.com, and someone will get in touch with you to answer any questions or just be able to give you more information about this product.
I thought this is something serious. It's a commercial break. Okay.
Yeah, it's a commercial break because you've been talking so much. So you're going to jump into our Q&A now. So I'm going to flip over our questions. Okay, so we've got one question here from Nan Sethjinder. And the question is, can you please share with us which idea or business model is exciting for you, apart from those that do well during COVID-19?
It's a very generic question, and the answer to us is always what kind of problem they try to solve. Try to differentiate between vitamin and painkiller. We will invest in painkiller, not vitamin. It can be generic, yeah, because we are sector agnostic.
Okay, next question from Pandu Shahir.
Oh, the new commissioner of IDX.
Oh, hello. And he's saying, how would you describe founders who are able to fundraise? What are the key criteria for success?
Okay, this is one of the most common question and the most important one that everybody want to ask. So there are three traits that we track when we talk to the founders. The first one is integrity. The second one is high-level self-awareness. And the third one is paradoxical. So integrity is normal, right? You have to say what is true, what is right, no creative accounting, but creative marketing, those are integrity. The second one, high-level self-awareness, is the one that just now I mentioned as well, self-reflection, understand your weakness, understand your strength. Why? Because when you run a company, you run a 50 teams company, 100 staff, 1,000, you need to upgrade yourself. And you only can upgrade yourself if you understand what you're good at and what you're not good at. And if you know your weakness, you know how to hire a member of the team that better than you. So that's high-level self-awareness. And the third one, paradox. You must have a contradictive traits. So for example, like you must be you know what global knowledge, you know what's going on out there, but in the same time, you have a local wisdom, you know how to execute locally. You have a strong will, you have a strong vision, but you have a mentorable ear, you still listen to advice. You are a generalist, you know accounting, you know marketing, you know business processes, you know how to build SOP, but in the same time, you can be specialist. You know how go deep and solve problem. So based on these three, then we know that they are good founders, they have a growth mindset, and they can go for long. But the key trick of investing in early stage is how are you going to identify these traits when the first time you met with the guy with no historical background, with no data point, and with no relation before the meeting? And how can you make decision during the first meeting? Yeah. So we leave that detail for the next webinar, maybe.
Okay, Ken. All right.
Thank you, Pandu, to allow me to explain this.
Okay, next question is, as an early investor, what is your take on Sequoia's surge, which I guess most of you would know is Sequoia's early stage program? Has it brought about a change in the overall industry standard, especially when with regards to term sheets at the seed level?
Yes, of course. I think Sequoia is a gold standard for seed accelerator. They have money, they have capability, they train and make sure that all the entrepreneurs know what to do. They have a network. Yeah, I think it's a very good program for the whole Southeast Asia ecosystem. It will lift up the standard of the founders in this ecosystem. So I think it's very, very good.
because there have been a lot of complaints about term sheets at the seed level which were not founder friendly. You know, some of the founders complain about having little choice and then they have to accept heavy dilution, and a lot of clauses which are more investor friendly than founder friendly. I mean, I guess, you know, due to inexperience or, you know, just ignorance, pure ignorance, they didn't know.
Are you referring to Sequoia Search or you're referring to other VC?
No, just the overall seed landscape. Which, I mean, I guess when you enter a season like COVID, right? Like, these are the cases that will come up, you know, because the crisis will surface all these issues where suddenly there's a conflict and then
I don't think this is something to do with the crisis, Christy. It is something to do with the VC themselves. When there is a crisis or there is no crisis, there's always good VC and bad VC, right? Yeah, it doesn't. So it is very important for you to understand the VC core value. Talk to the portfolio, talk to their networks, talk to their LP, talk to their friends, etc. Understand what actually they are looking at, how they make decisions. Then you know how to interact and what to expect. Yeah. Of course, there's a good VC, there's a bad VC. So I think it's nothing to do with crisis at all. Yeah.
Yeah, I think what I meant was that the crisis will surface some of these issues that had happened.
That could potentially, it will accelerate and bring some clarity. Yeah.
Yeah.
But during non-crisis, we have a lot of bad VC as well, you know. Yeah.
Okay. Sorry, so many questions. So next one is, we understand that EV Growth has begun sounding out LPs on plans for a second fund. How much of this has been, your first fund actually has been deployed, and, you know, are you able to share some of your targets for Fund 2?
Yeah, I think EV Growth 1, we deploy, I don't know, maybe 70–80%. Yeah, we are going to fundraise EV Growth 2 soon. And we are excited because we have a very healthy deal flow right now.
So for EV Growth 1, you raised 250. That's right?
Yeah, initially we only want to raise 150. Then it oversubscribed to 200. And then we hit the hard cap at 250, yeah.
So how confident are you of being able to raise more than 250 for your Fund 2?
Oh, we don't know yet. We haven't decided when or how we are going to do it. Yeah. But I think it should be soon once we identify all the paperworks and everything. Yeah.
Okay. And will this be a Southeast Asia only growth fund, or are you looking at global opportunities?
No, there's no way we do global. It will be Southeast Asia. Okay. Why you want to do global? I mean, Southeast Asia is one of the largest population region in the world, and this is one of the fastest growing economy. Why we want to go out while everything is in your backyard? Yeah. Okay.
All right. Moving on to next question. This is from Aisha, and she asks, do you think startups in Indonesia are resilient so far?
Are what?
Resilient.
Oh, yes, of course. Yes, especially our portfolio.
Okay.
Sorry.
And she says, according to a survey, 20% of Indonesian startups only have runway for September to December this year. How do you see this looking like? And do you have any tips for these startups to retain or even gain funds for survival?
No, those are the things that we explained just now, right? How you have a good mindset, and then understanding your cost structure. If you have to do cost cutting, please do so. Understand that all cost cutting will not happen immediately because there are processes that you have to run through. You must precisely measure when this will be effective, and you must be quite precise in implementing it because the margin of error is pretty limited during the crisis.
Okay, next question is from Leslie. How are you evaluating potential consumer investments amid pandemic-related behavior changes? Are there certain behaviors that you expect to be permanently changed, and how will this affect your current portfolio companies?
It's again a generic questions, right? So it's essential, non-essential, which one really matter the most, whether it's painkiller or vitamin. But for something very interesting, for example, one of my portfolio company, Sociola, they have been selling a lot of beauty product. We see that the SKU move towards personal care, and anything below the nose, actually the sales drop. Anything above the nose, the sales up, because everybody wear masker. So you don't buy lipstick anymore. So those are the behavioral changes.
Interesting. That actually makes a lot of sense.
Yes. And a lot of people, a lot of women buy skincare product. We don't know why, especially face care, face mask. My assumption, because many people play TikTok, then they realize that they have to fix some of their face. Maybe then they start, yeah.
Okay. This is a bit of a side question. I mean, and this is with regards to the travel restrictions that we still see in place broadly across the world. And the thing is that, as you would know, in Southeast Asia, a lot of capital, a lot of the VCs, first of all, are based here in Singapore. A lot of the venture capitalists are also here, people are also here as well. What is this going to mean when it comes to deployment of capital across all markets? Because we all know Southeast Asia is, you know, a whole group of different markets. I can only imagine that the likes of like Cambodia, Myanmar, even Philippines may not be able to survive during a period like this. Do you see a bit of a kind of like division in terms of capital deployment across, like a gap, widening of the gap in terms of the capital deployment across markets in Southeast Asia? Or do you think maybe venture capitalists are just going to, you know, continue doing Zoom and be able to do
frankly speaking, I don't know. The reason is because we have been focusing a lot in Indonesia, and the fact that even though I live in Singapore, but I'm Indonesian, so without being Indonesian, I can imagine what's going on out there. For other VC that based in Singapore and then try to, let's say, enter Myanmar, or I don't know how they are going to do it. Yeah. Because even before the crisis, before the lockdown, they have to travel and understand the local culture, local context, local networks, right? During this period, I don't know how they are going to do it. Yeah.
Okay, cool. Another question is, how do you align and negotiate with startup founders in terms of valuation during COVID-19? We kind of touched on this a little bit, actually.
I mean, it's the same without COVID as well. Yeah, just negotiate and see what makes sense. It's a buyer, willing seller kind of like negotiation, right? Yeah, it's the same. There's no change on the COVID, non-COVID situation.
Okay. Next question is from Adi. East Ventures has always considered itself as a bit of a hands-off investor. How has that changed during COVID? Are you spending more time with your portfolio than you usually do?
Yes, I had just explained that this is one of the busiest time in our career, and the way people picture us hands off, actually, it is wrongly understood, in my opinion. Okay, the way we look at the portfolio and the way we look at manage them, first we have to align the vision. My vision, the firm vision, and the founder's vision has to be the same. After that, we move into strategy. At the strategy level, we advise them. And most of the time, we advise them to avoid pitfall instead of advising them what to do. Why? Because if you're advising them what to do, they will be limited to your capability to advise them. But if you advise them what not to do, they can avoid some of the pitfall, they can run faster, and they can fly. Because learning from other experiences better. Then move on to the tactical level. Tactical level, we don't involve too much. Tactical level, like how do you run the marketing with Facebook or Google, or run the accounting, or run some simple hiring. We don't advise those too much, because you need a certain quality of management skill before you can run a company. If you can't even run a simple accounting, why you want to become a CEO of a startup? You should work for someone else first, right? So there is a vision, there is a strategy, and there is a tactical. It is very different. I give you an example. From Singapore, we want to go to Jakarta. Okay, that's the vision, the destination going to Jakarta. What is the strategy? We can take flight, we can drive, or we want to swim. That's strategy. You choose how you go there. Okay, we decide the strategy. The most cost-efficient way is take a plane. Then you want to use Singapore Airlines, you want to use Garuda, or you want to use Lion Air. That's tactical. We leave it to the founders to decide what flight they want to take. Because we can't be like deciding every single thing to them. If we tell you that you want to go Jakarta, take a plane because cost efficient, and then you still ask us what plane to take, I think you are not impressible, you know. It's, you get what I mean? The different layer of, yeah. So based on that, it seems like we are not hands-on, but it is not true. We are hands-on on different level. Yeah.
Okay, cool. We have actually come to the end of the session, so it is 3 p.m. sharp. Thank you everyone for joining us for this webinar today. So I know that there might be some questions that may not have been answered, so we'll be sure to round them up after this and probably get Willson to address them separately. Yes. So thank you once again for joining us. Thank you, Willson, for joining us today, and we hope to see all of you again soon.
Thank you, Christy.
Take care. Yeah.
Thank you, Deal.
Bye, everybody.
Bye.